Financial planning is a broad term that encompasses budgeting, retirement planning, investing, insurance, and debt relief. You don't have to be an expert in financial planning to understand what each of these terms means and how they affect you. Use this video as a guide to learn more about how they all work together to build a solid financial base for you and your family. We're Luxury Mojo, your financial advisor on the internet. Please subscribe to the channel and turn on the notification feature to be aware of new uploads. Let us now turn our attention to personal finance. Regardless of your industry or history, now is an excellent time to learn the fundamentals of finance. According to the National Endowment for Financial Education, 76% of Americans set financial targets for 2020, and 88% say they are financially stressed due to the COVID-19 crisis. If you fall into one or both categories, learning about finance will help you manage your money and achieve your personal and professional goals. Here are 5 simple steps to follow. Financial habits you should start developing right now to improve your finances. Budgeting. At the most fundamental level of personal finance, you should recognize the importance of and a need for a budget. A budget, also known as a spending schedule, is a guide that tells your money what to do each month. At the most basic level, a budget shows how much money you have coming in and how much money has gone out each month. Making a comprehensive and written budget helps you to make better financial choices regularly. When you're faced with a financial decision, a budget forces you to pause and consider your options. When you make a budget, you will see how much money you have for the first time. You can monitor your expenses and see how much money is left over, if any. The most basic way to make a budget is on paper, but you can also use a budgeting spreadsheet, program, or app to do so. If this is your first time budgeting, try out a few different methods each month and see which one better fits your needs and personality. Expense reduction. You'll have a much more excellent idea of where your money goes and where you can cut costs once you've completed a basic budget. For many people, it's as easy as reducing any of the small expenses that can add up. Others may need to examine their costs more closely to make deeper cuts and widen the difference between monthly inflows and outflows. Why is it important to cut expenses? There are 3 explanations for this. To begin with, it will free up more money in your budget, reducing your reliance on credit cards or loans to cover spending gaps. Second, if you have debt, adding more money to your budget will help you pay it off more quickly. Finally, getting extra cash will help you build up your emergency fund or increase your retirement savings. Many people have turned to online shopping due to the pandemic. Are you one of them? Now is the time to tell your story to the comment section. Be sure to subscribe to this channel and give this video a thumbs up. Getting yourself out of debt. And if you create a reasonable budget and eliminate excessive expenditures, you can still find yourself in debt. Using credit and accumulating debt isn't always a bad thing, but if you can't keep up with your payments or borrow more than you can afford to pay back, you could find yourself in trouble. When you have a high interest rate on your credit cards or loans, getting out of debt becomes much more complicated. Paying more than the minimum amount due per month is one of the most critical steps in getting out of debt. Because of interest and financial costs, even a small credit card balance will take over a decade to pay off if you only pay the minimum amount due. This could end up costing you thousands of dollars that you could be saving instead. If you follow the snowball strategy or look into a credit card balance transfer, you could be able to get out of debt faster. Saving for retirement. With fewer employers providing full pension benefits and the instability of Social Security, saving and planning for retirement is more critical than ever. Many people, unfortunately, believe that they do not have enough money to save each month. However, if you wait until later in life to start investing, you can lose out on the benefits of compound interest. Instead of being an afterthought, retirement savings should become a priority. With special tax-advantaged accounts like workplace 401k schemes, individual retirement accounts, IRAs, and individual retirement accounts for the self-employed, the Internal Revenue Service has made planning for retirement even more appealing. On some retirement savings, These accounts qualify for tax deductions, credits, and even tax-free earnings. If you haven't started saving for retirement yet, go through your budget and see if there's space for it. Insurance. You've made a budget, reduced your expenses, paid off your credit card debt, and begun saving for retirement, so you're good to go. While you've come a long way, there's one more part of your finances you should think about: insurance. You've worked hard to establish a solid financial foundation for yourself and your family, and now it's time to protect it. Accidents and incidents can and do occur, and if you aren't adequately insured, you can find yourself in financial ruin. You'll need insurance to cover your health, your ability to make a living, and your home. In those cases, life insurance, disability insurance, and homeowners insurance will help. You may wonder, what kind of life insurance do I need? Term life insurance protects you for a fixed period. Lifetime insurance covers you for the rest of your life, with specific plans including cash value accumulation. Permanent life insurance, on the other hand, may be more costly than term life insurance. It's crucial to think about which one is the right choice for your needs and priorities when deciding between the two. With these measures in mind, all that remains is for you to take the plunge. Investing time in your personal and professional development is a wise decision. It gives meaning to your ambitions or dreams. Financial preparation aids in a clear understanding of your objectives, including why you need to accomplish them and how they affect other areas of your life and finances. Inflation management is encouraged by financial planning. Increasing your success in securing, using, and maintaining your financial capital throughout your life is one of the benefits of personal financial planning. Increased financial control through the avoidance of excessive debt, bankruptcy, and reliance on others. Subscribe and turn on the notification bell to receive further financial advice. Again, we're Luxury Mojo, your financial advisor on the internet.